All right. Yeah, we have a lot of people on waiting, so let's go ahead and start it.
Okay.
Welcome everybody to our Leveraging Market Stats to Boost Your Business series. Thank you all for being here on this Friday. Thank you to everybody on social media. We're streaming also on LinkedIn, which we've had quite a bit of following there. So thank you everybody on LinkedIn that is watching. Anybody new to this program, well, we've been doing it for 5 years now. Every single month, we've been coming here on Zoom and talking about the latest South Florida real estate stats. But it's not just about the stats. It's about what is the state of the market, the South Florida real estate market today, and where is it going in the future. And part of the reason why this has been such a success is the different Miami leaders that come on. And today we have one of our best leaders. And she actually, if you guys aren't aware, she runs a great analytics data website, puts out great reports. That's analytics.miami. But Anna, thank you so much for being here. How are you doing?
I'm doing great. Thank you so much for having me, and looking forward to this first leveraging market stats of 2024. How exciting!
Yeah, let's kick it off the right way. 2024. So the first question, right off the bat is, I know you talk a lot about this, but for all the realtors on the call, why is it important for realtors to become that market expert and to tell Miami's story?
Yep, it is extra important because our market is in many ways differentiating itself from the national narrative and from other markets around the country, and also our segments of our market are behaving quite differently than what you get when you average the whole. The stories get lost. And so it's very, very important that real estate professionals know how to differentiate parts of the market and sort of counter what their clients may be hearing in the press that does not necessarily represent our market. And I think this reality divergence will continue in the next 5 to 10 years. And so it's always important to be an expert and knowledgeable, but I think it's extra important right now.
Yeah, no, great points. And also, guys, if you didn't read the Miami Herald today, I believe the article came out today. Anna is quoted there in a great story about house hunting homes for $400,000 or less. But you do a great job, telling that Miami story. So let's move on here for the next slide. Our agenda today, next hour, if you could stick with us, we're going to try to make it worth your while. We're going to go over the latest stats that the association is releasing to the media. The Miami Association owns the Miami MLS, one of the largest MLSs in the United States, and we're releasing data from there, and you'll be seeing it first here and getting the analysis. Like I said, we'll be here next month. We already have our leader set up for next month. So if you guys could join us next month, we'll continue to talk about the stats and how realtors could use and leverage these stats to be better at your craft and get more business. All right, so this webinar is being recorded. It's going to be posted next week. We'll get it up on our MiamiRealtorsLive.com, which is our 24/7 video library. And then also one of the top questions we get every time we do this is, can I get this PowerPoint? And the answer is yes. I'll if you guys could type in your email into the chat box on Zoom. Also, if you're on LinkedIn, if you could put it there afterwards, I'll compile it and I'll make sure to email the PowerPoint to you so you guys could like take your time and review the information. So if you could just put your email in the chat box, I'll get it to you. Probably next week, but I'll get it to you. All right, but before we get into the stats, also wanted to mention we try to make it easy for you here at the Miami Realtors. We have one website where we put all of our stats, all of our videos, all of our infographics, all of our reports. It's right here, sfmarketintel.com. I know many of you guys who continue coming onto the program know about it, but I know there's probably some new people here. So sfmarketintel.com. I might say it one or two more times as we go here, but that's the site. All right, Anna, let's try to get into
Okay.
some preview into the stats. These are some of the top metrics that I saw in reviewing the stats. When you look at, let's go over all four counties, and then I'll have a question for you. But here it is for Miami-Dade. Single family home sales are up 1%. Also, 400 to 600,000 condo range continues to be rising. Let's move over to Broward. Single family home sales are even year over year. And again, that mid market is up double digits. That's for total sales in Broward. Moving over to Palm Beach, single family home dollar volume is up. 1 million and up home sales are also up. We used to say that it was luxury, but in Miami, it's no longer the case. But at 1 million and up, and then Martin County, similar story there. But Anna, for my question for you here, let me go back to Miami-Dade. Is affordability. You had that article today in the Miami Herald, and there's a lot of talk about affordability. Obviously, it's an issue in Miami. But when you look at the 400 to 600,000 dollar range, sales are up. Does that point kind of get lost there when we talk about affordability and people looking for homes?
Um, yeah, a little bit. The reality with affordability is that the floor of the market has risen tremendously. So this article that I do with the Herald, we actually go through every single zip code in Miami-Dade and Broward counties that has population that's on a postal zip code, and then we put the median price and the increase year over year, and then they kind of pick which ones they want to focus the story on. But the number just going back 3 years to 2021, the number of zip codes that have homes with median price points below 400,000 or 500,000 has shrunk enormously. And when we look at like available listings below certain thresholds, below, let's say below 600,000, because the median price for a house in Miami-Dade is around 610, 614. It's down tremendously, and below 500,000 even more, almost 90% versus pre-COVID. So the affordability issue, I think in our case, is very much tied to supply and that floor of the market rising. And what I'm actually optimistic about is the Live Local Act, because what we're seeing in the news right now, every day we're seeing stories of projects getting approved or proposed projects that are including that 40% workforce housing. Now, this will address affordability through vertical construction, which we can do with condos. With single family, we cannot. So I think we're going to start seeing some divergence there. But I am optimistic that we can deliver some affordable solutions via such initiatives as the Live Local Act, which luckily South Florida is not afraid to build. We're not going to be San Francisco, and so I'm optimistic about those points.
Yeah, no, that's great points there on Live Local Act. And yeah, just talking about your article, I wrote down I love that quote that you had in the article. If you guys go ahead when you read it, but this was the quote that I wrote down that in the article from Anna. It says, "If we believe in the Miami story, then buying single family homes locks in land value in a way you can't get with a condo." So that was, that was a
Yep,
great quote there. Yeah.
yep, exactly right. You can't build vertical. Those lots are in finite supply.
Yeah, yeah, we have the Everglades on one side and then we have the ocean on the other. So, uh,
Exactly right. And then
yeah,
also in terms of transaction volume losses, this is kind of across all counties. Transaction volume losses are mostly due to losses of transaction volume at lower price points. And that's again loss of inventory, people not being able to sell because of interest rates. The higher up we go in our market, the more all cash it is, and the less it has that stickiness due to interest rates. So the higher up we go in price, the more we're seeing volume still far in excess of pre-COVID. The lower we go in price, the more volume has dropped as a general pattern.
yeah, very super interesting. Okay. All right. So let's move over. This is another top talking point, mortgage rates. They really skyrocketed there in 2023, but we have good news in 2024. It looks like is going to be a much better year for mortgage rates. Our chief economist, she forecasts 5.25% rates by the end of 2024. So we're at 6.89. I checked right now, but Anna, what does that do? How much of an impact will that have on home sales?
Hopefully it frees up some inventory at the lower end where people have been hesitant to sell because they'd be getting, well, if they want to stay in the region, we had medium pricing shoot up so much they get less house for more money with a more expensive loan. So it was kind of locked in. So hopefully there's some people there in the sidelines who need to sell, but it hasn't been imperative. And now if they see this dip in interest rates, maybe now they're like, okay, it's time to we can move now. So hopefully it frees up some inventory. It would be great.
Yeah. And that's a great point because that leads me to this next slide. Talking about people that who might need to sell. This was I wrote this down at the NAR conference, And this is a forecast for many out of the next 2 years. Look how many babies are going to be born, how many marriages, divorces. These are a lot of people that are going to need homes or changing homes, right? So that's another factor to consider.
Hmm. Absolutely.
All right. And then so this is a point that we talk about, maybe it's a time for realtors to get creative. There's with mortgage rates where they are, but hopefully now lowering. You're seeing a little bit more of this, right? The assumable loans, 2-for-1 mortgage buy down program. So this is something as realtors might have to get more accustomed to or more knowledgeable about.
Correct. That prolonged period of very, very low interest rates that we had for 20 years was an anomaly. So
Yeah.
now as this new reality persists, people will get more creative. So it's a good thing.
Yeah. We won't be seeing the 2% rates, right?
I don't think so.
Yeah, that won't be happening. All right, so let's talk about some market fundamentals. Anna is great in this on her website. Again, it's analytics.miami. So let's look at some of our fundamentals. Anna, population. There, you did a great job this at the time when there were reports that Miami's population is, oh, so many people had left Miami, but they left some part of the story out, right?
Yeah, they left a huge part of the story out. That was that in Bloomberg? I think it was Bloomberg. That's right. They had this kind of ominous headline. It was like, wow, what's wrong with Miami? All these record population loss, people leaving, and it made it sound like we were the anomaly, like we were somehow performing so badly. And they based all their findings on a Brookings Institute report. And this report had tracked something like almost 40 cities or counties with populations in excess of 500,000 around the country, tracking their population ebb and flow before and after COVID, and all but like 3 or 4 lost population during peak COVID, us included, New York included, LA included. So okay, that's to be expected. What's interesting is what happened after, and we went back to population growth positive, while New York and LA did not. And the article completely obfuscated that point and made us seem like we were somehow in worse shape than they were. But
Yeah.
haters
Yeah,
are
no, that's
fans
true.
too. That's what I've been saying. We're taking all their taxpayers, so you can't blame them.
That's great. Yeah. So that was great how we re refuted that. We got back to that. A lot of, they didn't talk about the international migration, how it continues to rise. That's one of the great points about Miami. This has always been the case, our international migration. And wait until you see our global report that we recently released. We're going to go over that here.
And what's great here is that we're still not at pre-COVID highs for population growth. And what's important to recognize is the surges that we had in our residential markets, especially for a new product, new prime location, expensive product, occurred during the time period where international migration was at lows. And so, thus, we can extrapolate that it was driven by domestic wealth and talent migration. And that domestic wealth and talent migration is still there. But now, as one would expect, the international is kicking back up. So, our market really has these two legs.
Yeah. And it's different from a lot of other markets that, don't have as many options to find buyers. So it's
Correct.
all right. Let's talk about some of you mentioned that some of the companies moving down here. These are the great graphics that our design department put together. You're talking about Blackstone is here, Goldman Sachs, Citadel, Founders Fund. These are all and then let me get to the next slide here. Anna, this was a great research by our chief economist, Gay Crowtone. She looked at IRS migration data and just incredible amount of wealth migration moving here. And it continues right on. And what is the impact as we see in the coming years from this?
Well, the impact, it's important to recognize that in these high tax jurisdictions that we're extracting taxpayers from, that 1% of their top taxpayers account for, to be conservative, I'll say 40, but really it's over 45% of their tax base. And we're taking those people, as we can see. Yeah, exactly right. So we're taking people who are, for whatever reasons, they've decided that they don't need to be where they were. COVID broke habits. Perhaps it's like, boiling the frog at some point, it has to jump. I don't know. But that's supposition. But the fact is that they're leaving. And we know from the IRS data that we're getting the high value people. So what's going to do is it's going to fuel what's called budget deficits at the points of origin, right? And we know this. It's been in the press recently. California is saying, wow, our budget deficit is bigger than expected. And so is New York. And I mean, only politicians are surprised by this because whatever. But so that this is going to keep happening. And when they experience these budget shortfalls that are going to accelerate, people are not good at perceiving momentum. These things accelerate. And as it becomes dire, they will most likely impose further wealth taxation as they are threatening, which will pour more gasoline on the Exodus fires, and we'll keep getting them. So we're getting productive taxpayers into our state, into our city, which is a wonderful thing because they're adding to our budgets, spending money in our local economies, hiring people, creating businesses, commerce. I think we had the most new business filings per capita in Miami than any other city in America this past year. So
Most new businesses.
most new per
Excellent.
capita new business filings, and the highest
Incredible.
percentage of high earning millennials, which is a great also forward looking metric.
Yeah, I mean, yeah, incredible what's happening down here in Miami. And so these are some more sources that back up exactly what Anna talked about. You could look at driver license exchanges because once you move to a new state, you have X amount of days to get the new driver's license. And shout out again to our chief economist. You compare it to pre-pandemic and surging, and it's the same states. It's California, New York, New Jersey. Let me go back to this one. We saw
Pattern
it
is
here.
clear. Like the
Yeah.
pattern is so clear. People just don't want to see it. These are
Right.
listen, I'm a registered independent, so I don't mean this as a political statement, just the pattern could not be more obvious. These are blue states with high taxes and that were high lockdown. All those things came together, and now there's an exodus of wealth, talent, and actual taxpayers happening.
Yeah, I love it. I love it. That's a great way to sum it up. Um, and then so some other stat points that realtors definitely should be aware of. Look how many new net residents per day Florida gets. This is unlike any other state. This is from the Florida Office of Economic and Demographic Research. Let's look at our population in comparison to 2011. Interesting how much has changed, and a lot of new, exactly what you talked about. People in the home buying years, peak home buying years, are the ones that are coming here, and that's great for our real estate. Yeah.
Yep, it's great for our real estate today, and it's great for our real estate tomorrow. It's a very good positive indicator, a forward-looking indicator.
Excellent. All right, so we talked about it. We have a new global study that we released in December. So let's have a little bit of fun. Thank you to got 57 viewers here on our Zoom. Thank you so much. And I'm sure on LinkedIn it's a lot. So let's have some fun. Let's see who knows their Miami Global trivia. Our first question is, what is the top foreign country purchasing in South Florida? Type your answer in the chat. How many total countries purchase real estate in South Florida? And number three, what percentage of Florida global real estate sales are made in South Florida? You could let's type it, light up the chat box, and we'll see who has the bragging rights at the end when we look at those answers. All right. So next up, let's go over some new stats. Median sales price. Let's see how we were doing, and of course, Miami continues to see record appreciation. Check this out. Almost 15% appreciation year over year for single family, 10% for condos. Anna, I'll go across the board here for let's go to Broward. You're seeing the similar storyline in Broward, Palm Beach, similar story. But let me go back to Miami. Incredible. This now makes it more than 12 years of consecutive price appreciation. Anna, my question for you is why is Miami seeing the price appreciation and other markets, let's say Orlando and other markets across the US are not? Well, what makes it so different?
I think if we look back at that chart of all the businesses that are moving here, I think that speaks for itself because those are the economic engine is strong, and I think that's why people and then it's a domino effect. As more people come, we get more institutions of culture, restaurants, all these things that people like. I see articles all the time about New York restaurant opening its first out of New York City location, Miami Beach. There was one in the news like this yesterday, so it kind of feeds in on itself. But all those businesses moving here, I think that's core. That's core and that's just going to keep building. And then people from wherever they left, their friends are like, oh, they're working in Miami. It's wonderful. Life is better there. It's going to keep drawing more people in. So I think it speaks to both the volume and the quality of the people that we're attracting.
Definitely. And I remember earlier last year there were reports that, hey, maybe Miami, the price appreciation will slow down here, but it has not. Incredible new stats. And here's a historical look that our design department put together. You could take a look at where it peaked and it bottomed in 2011, just like every other major market. We have these graphics on sfmarketintel.com. I told you I would say that. And then so here's a look at Broward historically, at least from 2008. Incredible price appreciation. Here's Palm Beach. Okay, and then so we got to talk about supply. Supply, these are 2022 numbers. We'll get the 2023, but Anna, supply is still below the historical, actually about like 40% where
Correct.
historically it should be. So that's a factor, right, on home prices because it's uh the supply is not there, so it's going to put upward pressure, right, on
Correct.
prices.
And 2023 followed the pattern of a small uptick off of 2022, but it is still far below that average for those wondering. So yeah, we're still far below the average. And again, to point out though that the loss of supply is mostly concentrated at lower price points, where it's basically disappeared. Like it's just it's shocking how much it's disappeared. Below 500,000, we're down. Was it over 80% for single
Yeah.
family homes versus pre-COVID? So
I think you need to sign some masker.
somebody's on there. Okay, so if we look at higher, if we take out the bottom half of the market, supply actually has not fallen off a cliff. So it goes back to that point of people being locked in their homes essentially due to escalating prices and interest rates. But it is absolutely pressure on the market. The floor has risen, and hopefully we get a little bit more supply this year if interest rates go down a bit.
Yeah, no, very interesting points there on how on the almost the tale of two markets there.
It really is, yeah.
Yeah. All right, so here's a look at how Miami compares to other global cities.
This is a
Uh,
great chart. Look at this.
yeah, really puts into
Yeah,
perspective the value, right, that we have in comparison to Tokyo and all these other cities.
correct. And the quality of life.
Exactly. All right, and so another top question that we always get here is, hey, prices continue to rise month after month after month. This sounds like 2008. Are we going to have 2008? And Anna, how would you respond to that when someone
I've
says,
answered that question many times by pointing out that the difference between this time and that time is the usage of debt. Bubbles are usually created by debt. They had liar loans. Everyone's heard those stories. Everyone's seen the movie, right? You had liar loans en masse, and it was a bubble. Bubbles are usually things that are built by debt. And when we look at them, looking backwards, if they've popped because the underlying asset values can no longer service the debt, which is why you get these rapid crashes. This time, our market is absolutely not driven by debt. We have a heavy cash market. Even when we go to lower price points, it's still maybe like 25% cash, and people had to get real loans, so no liar loans. And again, the higher up we go in price, the more it is all cash. At the very, very high end, like 2,000 per square foot condo purchases last year, they were 90% all cash. So no portion of this market has been fueled by rampant abuse of debt like it was last time. And that is the huge, huge difference.
yeah, no, I love that. And talking about cash, we have it in our news releases. Interesting for Miami-Dade, Broward, and Palm Beach. It's actually Palm Beach who has the most cash buyers, uh,
Correct.
50% or around that level. Very
Yep. And when you
interesting.
go higher up in price, it's 90, 80, 90.
Wow.
Yep. That pattern holds Tri-County. The higher you go in price, the more it's all cash.
Yeah. Here's a points that
Yep.
back up exactly what Anna just said. You could take a look at foreclosures. If we're going to have another 2008, foreclosures should be rising. Distressed sales should be rising. They're not. Credit scores are good. All right, so here's a slide put together in terms of why buy a home now. One of the interesting points here is that yes, mortgage rates are high, but if there is a next recession, you could refinance, right? That's just one of the points that I have here, but
Correct. I agree. I agree 100%. And then also it's important to keep in mind the context, the market within which you are buying your home. So these general points are true, but then I would say they were more true here because if we believe that Miami will continue to grow, then again, you're sort of locking in value today.
right, exactly. Okay. All right, closed sales. Let's take a look at these are new numbers we're releasing to the media. How are closed sales doing? And so total in Miami-Dade, they're down about 3.5%. Single family is up. Condos are down. Sales there.
Yep.
Let's take a look at Broward. Overall, they're down. Single family is even. Condos are -6 in comparison to last year. And Palm Beach, so almost, similar trend lines as we look at the three counties there. Um, but would you forecast a better year this year if as mortgage rates are falling, we should have more home sales this year, correct?
Yes, and again, to go back to the point of two markets. So total sales volume at higher price points is dipping. It has dipped off the peak because COVID was this cataclysmic event and there was a surge. So it's off of the highs, but it is far below pre-COVID. And that's not true for the whole market. It's not true for lower price points. So it's really important to keep this in mind because when we talked, we have it, documented through all these great charts that you had here showing this migration, this domestic migration of wealth and talent. It's important to recognize that the wealth and talent migration, these tax refugees, whatever you want to call them, they're not buying across the board. They tend to buy new product, new, nicer product, because our new, nice product is still a deal compared to other places. They're not buying old inventory by and large. And so this is also why we have this divergence in how segments of the market are performing. And the segments that are benefiting from the wealth and talent migration, despite being off of the recent highs, are still transacting in terms of transaction volume multiple times higher than they were pre-COVID.
Yeah, definitely. Yeah, interesting. So buying new products. So that's all the new condos that are being bought,
Yep, and single
built
family and
in
prime
downtown.
location.
Yeah,
Yep, exactly.
definitely. Oh, okay. All
The
right.
old
So that's
condo buildings are getting hit from all ends. It's just it's a separate topic, but it's not easy for them. Okay.
yeah. Okay. All right. So here's some a tool for all the realtors on the call.
Great tool.
How you could study the neighborhood is go on Market Watch on Matrix is a great way. Most real estate statistics are backward looking, but this is a way to see what's happening in your market, in your neighborhood in the last 7 days. So if you're not using this tool, you definitely should because it's included there with your membership. And just wanted to go over some other tools here for realtors, how you can leverage, become more profitable. Take a look at SunStats. Lets you zero in on any neighborhood. Really easy. I'm going to show you some charts there. We have our zip code reports. We actually just ended up posting, I want to say, more than 100 new reports on our website because we have annual stats, we have quarter 4 stats, we have monthly stats, but not just county, but we have city stats and neighborhoods. So that's on there. And there's RPR as well. And here's a look at what you could get on RPR. Here's a look at SunStats, how you could build your own chart. Okay. All right, great. So let's take a look at new pending sales. There's a little indicator of what we could see in the future. And so new pending sales, they are down for Miami-Dade. Take a look at Broward and Palm Beach. And anything in the data in pending sales, have you
Let me see.
take a look at that or?
Yeah, it's following what I'm seeing in terms of in inventory. And again, I would also say that the market is not a monolith. So most of the stuff, because the plurality of transactions happen at lower price points, obviously, right? Half the market transacts below the median. So for condos, the median price point is like 400, and for single families, 610, something like this. So by definition, half the market is less than that. And when we see the data set as a whole, what we're really seeing more than anything is a reflection of how the median and below, sorry, slightly above the median below is performing. And it's absolutely losing steam because of that lack of supply. Again, the higher price per square foot properties are behaving a little bit differently. It's just that it's that tale of two markets that we have going on here.
Yeah.
But hopefully interest rates can go down. It'll free up some of that lower priced inventory.
Yeah. So supply definitely has been an issue. In the news release that we're putting out today, we have noticed that new listings have increased across the board. So that is a great sign for a high demand, low supply market like us. New listings, I know in Miami, have increased for the last 4 months, consecutive months. So that's good news. We need that.
Yeah, we do.
We need that supply. All right, dollar volume. Sum of all sale prices in the given time period. Let's take a look at the new stats. December 2023. Anna, take a look at this. This always boggles my mind. You're talking about more than $3 billion of real estate sales in 1 month, and December's a slow month. December
Correct.
is, our peak times are March to September.
Two.
So December is
Yeah.
slow. So to get 3 billion, that talks about the power, right, of our industry.
Correct. So actually, I'm going to put this out next week. I actually have charted dollars spent annually across Tri-County and cross-county. And while we are off highs, the post-COVID immediate highs for aggregate dollar volume spent, we're still far in excess of pre-COVID. And what I found interesting was going back 10 years, 11 years, then the amount of dollars spent. So when I say so Tri-County, South Florida real estate of condos or single-family homes, the total amount of dollars spent in the last 10 years has gone up more than 10x.
Wow. In comparison to the 10 years before,
Yeah.
or
I'm gonna put this out next week. It's really interesting. Yeah. I was
that's
like, wow,
it's
this people,
mind-boggling.
yeah, it's amazing. It's really incredible.
10x.
Yep.
Wow. Oh, that's a great stat. Okay. All right. So let's talk about months of supply. We talked about how important that is. We need the supply. So 6 to 9 months is a healthy market. It's good for the buyers, good for the sellers. Less than 6 is a seller's market. More than 9 is a buyer's. Obviously, we're in a seller's market, but it depends. If you look at a neighborhood, is a different story. So here's a way you could calculate months of supply.
Mhm.
And I'll give you this entire PowerPoint again. If you could write your email in the chat, I'll email it to you afterwards. Months of supply for Miami-Dade is at 5.7 months overall. Condos 6.8, so that's creeping in. That's a balanced market right there, actually, for condos.
And
Uh,
again, similarly for this, if we look at the median price point or below, it's far fewer,
yeah,
far fewer. The numbers crept up higher because of higher price product. But if we look at median and below, the no, it's lower than that.
yeah, that'd be great to look at. All right, here's a look at Broward. There's
Yeah.
less supply in
Actually,
Broward.
and Broward is a good reflection of what I'm saying because there is less higher priced inventory in Broward. So Broward as a market whole gives us a more accurate snapshot of what like the normal market is doing because there are fewer super high priced properties there.
Ah,
Luxury
interesting point. I
segment
like
is
that.
smaller. Like
Yeah.
the luxury segment as a whole is a smaller percentage of the Broward market.
Yeah. I like that. You're right. 100%. And as you can see, it's 4.4, and then Palm Beach, similar 4.4 months overall months of supply. All right. So let's take a look at 1 million and above.
Yep.
They continue to increase. But as we've talked to brokers, I know Ron Sheffield says this is, luxury can take longer to sell because, as you said, there's a lot that goes involved in a 1 million and up or 2 million and up purchase, right?
Fewer buyers, more specialized products, less necessity driven. It takes more time. So it's normal for the luxury sector to have more months of inventory. It's not a bad thing.
It's not a bad thing. Yes. All right, so let's break it down by price bucket, and this is what actually exactly what you were saying.
Here we go. Exactly.
Months of supply. Yeah, there is nothing. They're under 500,000. Very hard to find any homes to, especially on
Basically,
the single family side.
that's what I mean. It's down over 80% versus pre-COVID. And whatever is left, it's like I'll click around for fun. It's generous to call them houses, some of them. It's
Yeah.
basically land with some dilapidated structure. But yeah, there's
Yeah, and it could also be attributed to there's no distress sales. I mean, it's 1%, 2%. There's nothing, no distress sales happening.
yep, exactly.
All right. Okay, so let's talk about some specific neighborhoods. And so this is the hot markets, and we do it by months of supply, the lowest months of supply. And so ranking number one in Miami is Miami Gardens with just 2.4 months of supply. And on the condo side, it's Kendall at 2.3. Anna, any of these neighborhood or cities that stand out to you or you like to talk about?
I mean, I'm kind of just this is kind of what I was looking at for the Miami Herald study. It's and by the way, I know just from the report that I put together that many of all these neighborhoods actually um, have had significant increases, percentage increases in median pricing in the last 2 years. They still remain amongst the most affordable prime location areas, but they've also risen dramatically in the last few years. So I would say at their low months of supply, it's because most of these areas are not that remote. They're pretty well located, and you're still able to buy something below $1 million, which is why I think it is this, and something that's livable below $1 million.
Yeah.
Homestead has been interesting. Homestead's a bit far south. Homestead has had really rapid appreciation this past year. Perhaps people are finding it as an outpost where they could find something nice for a certain price point, and word has gotten out. But yeah, to me, these are basically areas where you could still find something livable for not a crazy amount of money that are relatively centrally located.
Yeah. And Homestead was one of the cities highlighted in that article that you had.
Yep.
Excellent. All right, so let's take a look at Broward. By the way, we have these graphics on sfmarketintel.com. If it actually it will be there today. We have them up. You could also access them through our Photify. If you guys aren't using Photify, we are loading that up. That is a on-the-go app for realtors. We'll talk about that in a little bit. All right, so here's a look at Palm Beach, the hottest markets in Palm Beach and Martin County. All right, let's talk about active inventory. Let's see how many listings are out there. And we are seeing overall listings. This is a good sign. They are up across the board, especially in Broward and Palm Beach, because Broward and Palm Beach really went to almost all-time lows. And so
Mhm.
they're just coming off that. So
It's very good. It's very good that we're coming off of all-time lows for inventory because it dropped so dramatically.
yeah. So that's great news there. Median percent of original price received. Let's see how much when they come to terms on the agreements, and this has always been the case in South Florida, almost always at 100%. So no surprise here, 96, 95% to original list price.
Actually, and again, if you look at median price point or below, it's 100% basically.
Is that, yeah,
Okay.
yeah,
Yeah.
yeah.
The lower you go in price, the more close it is to 100%. There's no negotiability because there's no inventory.
Yeah, yeah. And if you could go more than 100, I know like during the pandemic, there were so many bids, and if you could go over 100%, it probably would have.
Correct.
Yeah. All right. How long does it take to come to terms in South Florida real estate? In Miami-Dade, it takes 32 days. Broward 31. So similar figures across the board. I think these are healthier numbers because I remember during the pandemic, it was like 6 days or 5 days, right? So this is good.
This is far healthier, correct.
Yeah.
That was that surge. People didn't know what was going on, and that can't last forever. Now it's getting back to a more normal pace.
More normal. Yeah. More normal market. Yes. All right. All right. So let's go over some of the talking points that we talked about. Inventory still at historic lows. Mortgage rates, our chief economist predicts we got some good news this year. Hopefully down around, under 6% by the end of 2024. She forecasts home sales to rise this year. And of course, our prices continue to be a national leader. All right, global study answers. Let's see who got them correct. First question is, what is the top country purchasing in South Florida? It's Colombia. Yes, I see Luz Selena celebrating there. Um, Thank you for let's take a look at the chat box. Thank you for all the emails. I'm gonna get to those. Um, Trying to see. I know for sure because I saw Luz's reaction. There was some Venezuela. Yeah. Okay, but yeah, great job there. Yes, it's Colombia. And overtook Argentina. Argentina was the #1 country last year, so Colombia is the new leader. And let's go to how many total countries purchased real estate in South Florida? This is a great number for a realtor to use. 52 countries purchased in South Florida. Anna, is there any other market that can say this?
Not that I can think of. I think I have seen some chart that we lead the nation in terms of the number of countries that send us buyers. That's pretty awesome.
Yeah. And then this is another one that our CEO, Teresa Kinkenny, loves this statistic. Nearly half of all international purchases are in South Florida. Amazing, 47%. And what's interesting about this is check out number two. Look at the separation between the second place. It's really amazing.
Not even close. This goes back to what we see in the news recently, that people like Bezos, who could live anywhere, quite literally, he can live anywhere easily, and he chose to live in Miami. So I think that speaks volumes. Someone with infinite possibilities, a few of them now have chosen Miami.
Yeah. And let's see if you could bring some more Amazon headquarters down here or something like
I
that.
think they will. I think they will. These guys kind of travel, like people follow them. There's like a gravitational pull. It's like a court. It's like the court around the emperor. So as more of these guys come, kind of like the people in their orbit, the businesses, they'll come too. It's still early days. Just need
Definitely.
Elon
Okay.
Musk to move here now, and then we'll have.
All right, tools and resources. We went through some of these, but SunStats, are you guys using SunStats? It is a free Miami service. Really, you could look at actually some of these graphics I produce are from SunStats, so take advantage of that. We also have co-brandable material for realtors to use. It's miamirealtors.com/co-brand. You guys could put your company logo, your headshot on these, and use them to market properties, market South Florida. Photify, we talked about Photify. It's a new app that is free for Miami members. You just have to sign up. And there's a website right there, but it's essentially we give you free templates so you guys could share, if you have an open house, you upload your picture and you upload your headshot and your company logo, and it makes it easy to share on social media. So we have so many templates, so you guys should be taking advantage of that. Photify. All right, so we have these reports. I want to shout out Bolivar on our design team. He uploaded all we have more than 100 reports, how I talked about on sfmarketintel.com. So that's another resource. We have our market focus videos that you'll be seeing on social media. We'll be posting those. We have zip code and city quarterly reports. RPR. We have our trainers. Any help if you have a question on SunStats, a question on Photify. These trainers put on classes every single day for us, so take advantage of that as well. All right, Anna. So I want to take a look at cross-market demand, and so this is which markets are looking at our listings, and this is from Realtor.com. I love this right here, but no surprise on the top markets looking at here, but how can realtors use this information to leverage their business?
Yeah, this is what I would say. So this flow from, I mean, I'm not surprised to see New York there as number one. We're New Yorkers. I grew up in New York City. I've been here 11 years. The state of Florida is pretty much tied with the state of Texas in terms of net migration, total amounts of people coming in. We're getting more of the higher taxpayers, and we're getting a lot of people from New York. So number one, we're in the same time zone as New York, so they're less likely to go to Texas. And then number two, New Yorkers are not going to go live in Texas. That's just it's less of an ideological option. Even the ones who aren't very liberal, it's just Texas is just nothing bad about Texas, but it's like in a different universe. It's not in the same corridor. New Yorkers are used to coming to Miami. And we have this great international airport, all these things. So you can continue your life. It's like an extension of your existing life. So what I would tell people is that to remember that the market is not a monolith, and that the whole market is not transacting where it was pre-COVID. We see where these people are coming from, and we need to recognize that certain segments are attractive to this incoming wealth and talent migration. And then perhaps to align oneself towards that segment, because I see those segments as staying strong, because we're going to keep attracting these people. I mean, right now, the state of Florida has more AUM, assets under management, like a hedge fund term, than the state of Connecticut for the first time, because $1 trillion of AUM has left the Northeast. So this is not going to stop. So again, what I would say is just recognize the market is not a monolith, and that we're going to keep getting these people who are going to keep leaving these increasingly these states that are increasingly hostile to capital, and that perhaps to align oneself's business towards this incoming wave.
Yeah, no, I love it. I love how you broke that down, the New York to Florida, the reasons. So we are the sixth borough, right?
I mean, I don't even like that word. I used to say that a long time ago. I don't like that as much because it makes us sound like an extension. I don't think that's it. I think we're ascending. This is the difference as our own entity. And it's another stat there. Like this was out in Bloomberg, I think 2-3 months ago. That for the first time since they measure this, the 6 fastest growing southern states, of which Florida is one, now account for more of national GDP than the Washington D.C., New York, Boston corridor. And that's not going to go backwards either. That's a tremendous shift. I've been saying shift in focus. They call it shift in economic center of gravity. Like same thing. It's shifting, and it never goes backwards. History never goes backwards. It's still early days, and they're going to be in denial about it. But the reality is as their taxpayers leave, their budget shortfalls will just widen, and they will just become more hostile towards capital. I mean,
Yeah, no.
it's like a slow moving car accident. It's the Venezuela script, like it is. But this is what they're doing.
Yeah, yeah. Wow. That's excellent. Okay. Great job there. And then so we talked about New York, and then it's across the board here. So kind of how you mentioned earlier, it's a pattern that we're seeing over and over and
You
over
see
again.
LA there, Cook County, Illinois, also the newly elected mayor of Chicago a few months ago, first week in office, proposes more wealth taxation while they have an exodus of population. I mean, it's brilliant. They can't help themselves. New York, we have New York 910. So yeah, it's a clear pattern.
Yeah, yeah. We saw that with the Citadel CEO. He moved here from Chicago. Same
Correct.
reason.
He's a Bezos type. He could afford to live anywhere. He can't spend all his money if he tried, and he chose here.
He chose here and he's investing in here. So here's Palm Beach. The Palm Beach is really amazing because it's almost like heavier New York. Um,
Yeah,
New Yorkers love Palm Beach.
they do. They do. Palm Beach was always one of those vacation places for New York, so it's familiar.
Yeah. Um, all right. And so here's my information. I wanted to I did see some questions here. Let me take a look here in the Okay, Catherine wanted to know the supply chart. Definitely. I'm gonna Catherine, if you have put your email in the chat, I will get you the PowerPoint. So you could review that at your leisure. Trying to see if there was any other questions. Sean Greco says, also, I feel we overcorrected to the downside after the recession, so it was also recovering that. Not exactly sure by that. Okay, and I believe Margarita was asking for the link to the article, your article in the Miami Herald, so I could get that to her.
That was by Rebecca San Juan. So you can also just Google her. It'll be her latest article.
That's true.
That
Okay.
every year with her. She's a great journalist, very thorough.
Yeah, so I'll write her
Yes, by Rebecca San Juan.
Rebecca Summer.
And she is a Miami native, actually. She's grown up here. So somebody got mad at the article on Instagram.
Oh, somebody got
They said that they said whoever wrote this is not a Miami native. I said actually she is. She's lived here her entire life and she loves Miami. It was just that we do this whole study of all the zip codes, and then she picks the 4 that still have this lowest median price point, and it is what it is. And all these comments on Instagram were saying that's the hood. Who wants to live in the hood? Blah blah blah. I mean, that was not the question. The question was that she pointed out was where are the lowest prices? Obviously, the lowest prices are not going to be in what you would call the most desirable area. That's why they're the lowest prices. But I mean, obviously. But the interesting thing is that despite being at these lower price points and currently the hood, which is what these people were writing, if you look at the map, they're still centrally located, which is what makes it interesting. It's not the remote hood, it's a centrally located area, and everything is developing around it. So actually, it would stand to reason that this will all look very, very different 10, 15 years from now. So
yeah, yeah. Excellent. Okay. Um, okay, and thank you, Catherine. I already posted. Thank you guys for helping. She posted the article. Thank you, Carlos.
Thank
He
you.
says great job.
Then we have a similar one. It was a two-part study. So the first portion that they published was for single-family homes. So a similar one they're putting out next week for the condo market.
Yeah. Okay. Yeah. Okay. So I'm looking forward to that. So yeah, we're almost at 3 p.m. Anna, thank you so much for being here. A lot of fun. You
Thank
did a
you.
great job, and always enjoy talking data and stats with you.
Thank you. No, amazing job putting everything together. And it's just listen, everyone, we're super lucky to be in South Florida. This is all a very, very positive thing. People who could live anywhere are choosing to live here. So we just have to recognize where the wealth and talent migration is coming from and ride the wave up. This is one of the best places to be.
Yeah, and it's the best place to be a realtor as well. Yeah.
Yeah, that's what I'm saying in general. Correct. Exactly
In
right.
general,
You
yeah.
want to be, whatever you're doing, whatever your business is, it is better to be in a place that has more business creation happening because I think the economy there is growing. So these are all positive things.
I love it. Okay. Well, thank you so much. Thank you to everybody. Incredible viewers on a Friday. Thank you for sticking through the whole webinar. And everybody have a great weekend, and we'll see you next time.
Thank you, everyone. Let's have a great 2024.
Definitely. Thank you,
The
Anna.
website again for the information.
Our website.
Anna's for the
Oh, Anna.
stats.
I can put it in the
Oh.
chat. It's
Yes, please. Thank you.
analytics.
Analytics.Miami. And I publish charts also on Instagram, Anna_analytics. And then also I do a monthly dive in the markets webinar thing that's called askannashow.com. That's where I publish everything. So
Yeah, definitely check that out. Analytics.Miami. Excellent. All right, guys. Well, thank you so much. Thank you, Anna.
take care, everyone. Thank you. Have a great day.
You
Bye-bye.
too.